Many people are not allowed to get into private equity. In the U.S., you have to have a net worth of over $1 million and you have to have an income above $200,000.
Today on the program, Dr. Joel Shulman from Shares. We take a look at how retail investors might get the opportunity to invest in private equity.
I think the potential for private equity is larger than crypto. You've got many private companies that are worth currently $13 trillion.
We'll speak to the people behind the first private-public crossover exchange-traded fund.
There's no question, Elon Musk, people either love him or hate him. Arguably, he's one of the greatest entrepreneurs we've ever had, certainly the richest on paper.
Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording.
Joel, you're all about democratizing access to private equity. I'm really curious to see why you're so passionate about that.
Well, so for the last 20 years, we've seen ETFs increase from about $1 trillion to about $13 trillion. And corresponding with that growth in ETFs, we've seen a similar, almost identical increase in private equity growing from $1 trillion to $13 trillion. And now, so we've seen this parallel path of two fairly large markets increase in size, considerably increase in size, 13x. But yet we haven't seen any sort of crossover, no linkage. And so we're excited to provide opportunity for retail investors to finally access to this private market that they've been precluded from investing in all these years.
One thing we can't ignore, though, this week, Joel, is the sort of sea of red that Wall Street has been experiencing. They're still pretty bruised even the second week in now. The tech stocks particularly, I know that's one that you favour quite a bit, have been hit. What's your perspective, A, on where things are going, but also is this constant volatility sort of making a sort of statement whereby some companies may not really want to list anymore and remain private?
Well, so independent of whatever's been going on the last couple of weeks here in the U.S., and they peaked about mid-February, and since mid-February, things have been on a decline. And that corresponds probably more so with policy issues and maybe valuation issues to some extent. A lot of things going on that you probably hear about in New Zealand that is addressing sort of our internal situation with potential concerns and backlash on tariffs. Independent of that, however, the reason why private equity has not been coming to market more frequently, there's been a hesitation among many of the issuers to go to the IPO market, public markets, for the last few years. And there's a variety of reasons for that, perhaps nuisance lawsuits and other things, which have caused many companies to pause. So when we think about 25, 30 years ago, when Amazon went public at $500 million, and NVIDIA went to market at $560 million. This is back in 98, 99, around that time period. We're not seeing that anymore. We're seeing companies stay private longer and come to market, 10 billion, 20 billion, 30 billion, levels that 25 years ago would have been unheard of. And so it's more of that, compared to the recent tumult in the marketplace.
Okay, so this volatility, you thinking too that this is going to be the new normal, for example?
Well, I think the current volatility is a temporary happenstance in the U.S. markets. In fact, if anything, I think this may be a buyer's opportunity to come in. And the reason why I say that, where the last dip we had was in 21, 22, we actually had a recessionary environment, recessionary conditions. We had interest rates going up. We had the economy slowing down. We had a lot of problems stemming from the COVID-19 crisis and the fallout from that. Whereas now we're seeing a volatility associated with internal and concerns regarding tariff issues. But the economy here in the U.S., one of the strongest economies in the world, the economy is generally okay. I mean, the economy is chugging along at a 2-3% or so clip on GDP. And so I don't see the same sort of issues we've had in the past when we've seen markets slow down. So I see this particular drop in the last month more temporary than long term. I think actually in 2025 we're going to see the markets end in a very strong path. Particularly here in the U.S., I see the markets ending on a strong note.
Joel, just thinking about the popularity of private equity, I mean, we've seen the likes of governments and pension funds, a number of kind of traditional institutions, if you like, want a piece of the pie.
Right.
What's behind that? Are they feeling that it's less risky? Because, I mean, it is classed as an illiquid asset.
It is illiquid, and unfortunately, retail investors are not allowed to get into this. You have to be an accredited investor, at least that's the case in the U.S. and most markets. You have to have a net worth. Again, in the U.S., you have to have a net worth of over $1 million, and you have to have an income above $200,000 or $300,000 if you're a joint filer between you and your spouse. And so many people are not allowed to get into private equity, and they have to watch these opportunities pass them by. So when they read about, an Anthropic or an OpenAI or a Scale AI or an Anduril, or in our case, SpaceX, they're not allowed to invest in. And so it's only the accredited investors, the institutional investors, the big pension funds, endowments, and the rich individual investors, the ultra high net worth or high net worth, they can invest in private equities and share in these rewards.
Joel, let's have a look at XOVR, which is the private public crossover exchange traded fund, which I think you launched back in August last year, so not that long ago. And It's called the first of its kind, but is that because it is actually access for retail investors? What's the difference?
So it was the first ETF to allow private equity in the ETF wrapper. And so private equity has been around for a while in open-end mutual funds or closed-end mutual funds or even something called an interval fund. But this is the first time it's been in an ETF wrapper. And there's some nuances to that. The interval fund may not trade as often or allow it may trade more, but it may not allow liquidity very often. I should have said that. A closed-end fund may trade at a premium or a discount to NAV, and so the net asset value. So if it trades at a premium, that means that the true value of the assets are one level, and the price that you pay to access them may be at a higher level. With an ETF, it's generally priced very close to net asset value, and it allows trading through the day, which enables people to have liquidity to go in and out, which for a private equity for an ETF to have private equity is unusual. It's 85% in our index. We have an index called the Entrepreneur 30 Index. It has a track record that goes back for many years, and it's a growth-oriented index. And importantly, when we built the index on a VC platform. So by way of background, I'm a professor at a school called Babson College, which some people in New Zealand may have heard of. It's the number one school in entrepreneurship, and I've been a tenured full professor there for many years. And I built this model to invest in publicly traded companies based on how venture capitalists invest in private companies. And so we've been doing that for many years. So for us to now go into private equities, it's consistent with the way we've invested right along, where we look at companies as if they were private or venture capital backed firms. And we look at those companies both in the public form, but now we're going back and getting them right before they go public.
So Joel, that index, is that what this ETF, this private public crossover actually tracks? Is that right?
Right. So the index is called the Entrepreneur 30 Index. It actually has a ticker. The E is in Edward, R is in Robert, 3030. People, investors, or anyone chooses to look at XOVR, they'll see that it's highly correlated, moves very closely with the ER30TR index since we relaunched on August 29th, 2024. So prior to August 29th, the fund was investing differently.
Okay, so this ETF tracks that entrepreneurial index, if you like, and that's that basket of 30 entrepreneurial stocks. But you have the private equity aspect. Is that
Right.
included in that? Like, I know SpaceX is 11%, I think, of the holdings you have currently. And then you've got
Right.
other things like OpenAI.
So the index does not include private. So the difference between the index and XOVR, XOVR has the index for the majority of the fund, but also now has 10 to 15% private equities. The largest holding, SpaceX. So SpaceX is around 10 or 11% of our total portfolio, and it represents the majority of our private equity holdings. We have another stock, another private stock called Klarna, which is a buy now, pay later stock. It's a Swedish company. They just announced that they're going to come out with their IPO. And that we expect that news to be forthcoming in the next week or so.
So the holding of, say, 10 to 15% private equity, is there a cap? Like, would the regulator come down on you if you increased that? Because I've seen, some of the other competitors are thinking about maybe up to 35% private equity in an ETF.
Right.
What sort of constrains you for keeping it at that? And is there good reason to keep it at, say, 15% private equity?
So private equity is, as you point out, an illiquid asset. And even though SpaceX is a $350 billion market cap as of the last tender offer, it's still, and it's widely held among high net worth institutional investors. It doesn't trade as frequently, obviously, as a public equity security. So it's still considered illiquid. And even though it may be more liquid than other private equities, it's still, in the general scheme of things, illiquid. And as a result, a regulatory body here in the U.S. called the SEC, the Securities Exchange Commission, restricts having too much of an ETF or any. They're called 40 Act funds, which means they're regulated by the 1940s Acts, which includes mutual funds, open-end, closed-end funds, and ETFs. Those instruments, which go to the retail market, need to be limited to 15%. And I think it's a good rule because it protects the retail investor, and we're being very careful to stay underneath that 15% threshold.
So it's a sort of a guardrail in some ways that the fund has, so that protects the retail investor.
Right.
What about in terms of access? Is there no minimum investment, I think is what I read? And also, sort of the cost, you talk about it being relatively low. Actually, how accessible is it for someone who doesn't have lots of money?
So access for an ETF, and our ETF has no minimum. So we have daily liquidity. You can come in. We have investors who come in for $100, or I'm sure we have probably some investors who come in for $50 or $100 or $1,000. So there's no limit, no minimum investment, daily liquidity. You can buy and sell the same day through trading hours in the U.S., which are 9:30 to 4. We try to market pretty close to net asset value, which is on a daily basis they get that, and so we think it provides, and we try to keep our fees relatively low, for this type of instrument. Other instruments that have access to private equity charge appreciably more than our management fee. We're well below 1%, and so we try to make it attractive to any investor. Someone could be a retail investor with $50 or $100 to put to work, and they could be somebody. We had an investor today to come in for $3 million. So we have a wide range of investors who come into our fund.
What are the risks, though? Because we've talked about illiquid assets being the private equity aspect, but as you've sort of said, it depends really on the likes of that private equity. With SpaceX, it could be slightly different. The risks, are they as great as they would be for other investments, or how would a retail investor kind of assess that?
Right. So first and foremost, the fundamental risk that the investor has in XOVR is just the market movement. And so we are growth oriented. We have exposure to tech, and we primarily are in 4 sectors: tech, information technologies, healthcare, consumer discretionary, and communication services. We have some fintech as well. And we have, of course, exposure, to space exploration. So we tend to be in high growth industries, high growth companies. And so first and foremost, the risk that an investor would have in our funds, which is the same that they would have, for example, if they invest in the QQQs or other growth-oriented indices that invest heavily in tech and healthcare, is the market movement. So if interest rates rise, tech and other securities which are considered long duration means you get more of your benefits in the future. Those types of stocks are going to suffer when interest rates go up, or when there's market volatility, or when markets contract. So investors tend to see when investors get nervous, they tend to move more to value, or they tend to move to cash, or they tend to move to bonds. When you come to private equities, you'll see it's probably even more exacerbated in the marketplace like that. So for example, one of the stocks, and even though the private markets have been, showing with SpaceX, some of the secondary markets are showing SpaceX, doing well and so forth, which, we would expect that, to do well based on a lot of idiosyncratic conditions. Some of the peer benchmarks in this, market are moving. So sometimes you'll see privates not correspond with those movements because the other public markets are moving daily, and privates may be seen as stationary. They tend to move in step function. They can move in a step function both up, and they can move in a step function down. And as we saw in 21 and 22, privates, were moving in a step function down. Now we're seeing, over the last couple of years, markets were more positive, more growth oriented. We saw privates appreciating during 2023 and 2024, early part of 2025. And we'll see soon, for example, probably our best litmus test is going to be one of our holdings, Klarna. We'll see how it comes out. We bought it at a valuation of market valuation 12 billion. Well, it's going to come out. The peer benchmarks, like a firm, there's a company in Australia called Afterpay that was bought by Block. We'll see very soon how the market is valuing these, and we expect our stock to move comparable to these valuations as well. So we'll have a pretty good insight fairly soon, probably within the next few weeks, how that particular private security is holding up or not when market information comes out.
Is there advantages to investing in an ETF like this in terms of that private equity aspect? As in, would you get more transparency than if I just went straight into private equity privately, if you know what I mean?
Well, if you went into a private equity directly yourself, that means you're, again, you're either a high net worth, ultra high net worth individual investor. You can spread your legal costs and infrastructure costs in buying these things. And plus, you'll have a better idea of how to negotiate if you're doing it frequently. So for many investors, we're, let's say, putting to work $500,000 or less, even if you're an individual investor, even if you're a high net worth investor, you may not want to go directly in. And for everyone else, you're not allowed. You can't get into it because there are restrictions on getting in. And for even ultra high net worth people, they may want the liquidity because they may want to go in, even if they have the ability to go directly into a private equity, they may want the liquidity. Maybe they have a wedding in the family, they want to spend money or buy a new house or buy a boat. So the liquidity becomes very important to people, and that's the advantage of an ETF.
What do you think the potential for private equity is? I've seen you've quoted before saying it could be, I think, 5 to 6 times the size of crypto and well bigger than, as you've already explained, ETFs. Why do you think that? And how soon are we talking?
Well, crypto is an interesting asset class. I don't recall saying it's 5 to 6 times larger than crypto. I'm not saying I wouldn't say that. I think the potential for private equity is larger than crypto in that you've got many private companies that are worth currently $13 trillion. Crypto is currently, I think, $1 to $2 trillion. I don't know after the most recent price point. So currently it's 5 to 6 times higher. Maybe I was quoted saying that's currently it's higher. In terms of the trajectory, I think private equity is going to continue to attract more and more capital. We're seeing it, through the early part of, we saw it in 2024, it was attracting a lot more of the capital going into companies than even public equity. And as I mentioned before, many companies are choosing to stay private longer for a variety of reasons. And so as a result, and this is a global phenomenon, the fact that we're seeing Klarna, which is a Swedish company, coming to market here in the U.S., suggests that this is an opportunity for global investors. So there are probably companies in New Zealand that may choose to go public someday, and maybe it's going to take them a while. Maybe some of your best known companies down there would like to tap the public markets. The best markets to go public tend to be in the U.S. They tend to be the NASDAQ and the New York Stock Exchange. So, for example, we've seen in Europe the London Stock Exchange pale in terms of volume compared to the U.S. markets. Maybe one of these types of vehicles where larger, better known brands are seeing private equity as a mechanism to get there in anticipation of going public maybe 6 months, a year, within 2 years down the road.
Is Rocket Lab one that you've looked at, or is that a conflict given you've got SpaceX?
Rocket Lab is a pure company. It's an entrepreneurial company. It's what we looked at. It's currently a small cap. We tend to, in our XOVR ETF, one of the things I did mention, these are entrepreneurial, publicly traded entrepreneurial companies, but they're large cap, which means that they tend to be $10 billion or larger in cap size. So Rocket Lab is a company that we've looked at. It's a little small by our standards in terms of the fund we have, and moreover, we already have a very large position in SpaceX. We see that we see SpaceX is the dominant player, and so one of the things I did not mention beforehand, when we go into private equity, one of the things we want to do is pick the leader. We want to pick the company with the biggest moat. In the case of SpaceX, one of the things I didn't mention beforehand, it's not only an entrepreneurial company that obviously is involved in space exploration, but as your group knows in New Zealand, it has Starlink. And Starlink is the crown jewel of SpaceX. And because they have 7,200 plus satellites in low Earth orbit around the world, and because they're now supplying telecommunications to geographically remote locations, both on land, sea, and air, around the world, because it has geopolitical importance for military capabilities. This is emerging. SpaceX, which holds Starlink, is emerging as one of the most critical assets the United States has from a military perspective. And we believe that this is one of those companies that's going to continue to rise in importance globally, but certainly within the U.S. And that's irrespective of the fact that Elon Musk is part of the Trump administration. So there's that extra political benefit that we see that makes us like this particular asset even more.
Have you had any backlash? I mean, Elon Musk isn't always the most popular with everybody around the world.
Right. So the backlash is there. I mean, there's no question. Elon Musk, people, either love him or hate him. You may know our president also has people who are polarized around him that love him or hate him. I saw a recent poll that says he now has the most popular ratings he's ever had, but he still has a large percent of the population that don't like him. So irrespective of whether people think he's great or not, we have to recognize that politicians, by the way, the same thing held true for the politician before him. Joe Biden was very polarizing, so half the population didn't really like him. So in these particular situations, there tends to be a backlash among various political groups. With Elon Musk, arguably he's one of the greatest entrepreneurs we've ever had. Certainly the richest on paper. A lot of people don't like him, but a lot of people do like him. And in terms of his capabilities and what he built with SpaceX and Starlink, we think it's an extraordinary company. We know that sometimes there's, again, geopolitical risk. So when the U.S. and Canada were having tariff issues, there was a politician in Canada who said, we want to cut off the Starlink. We want to cut off the Starlink contract. Well, what they're really doing, what this politician was doing, is cutting off Starlink access for 10 or 15,000 people living in geographically remote areas of Canada that weren't going to get the cell phone service and TV. So he wasn't really hurting Starlink so much as he was hurting his own consumers. So the fact that some of these assets are becoming a geopolitical, hot potato, we don't believe is a long-term concern. We realize it's an issue, but we believe the value and the benefit of Starlink, not only in space exploration, but more importantly with telecommunications and what it has in terms of capabilities, for weather satellite monitoring and helping to grow telecommunications globally is really important.
Just wondering, where does sustainability come in with the index that the fund tracks for the listed equities anyway? Is there any thought of that, or is it purely on entrepreneurship and picking a great entrepreneur as opposed to an average entrepreneur?
Well, it's interesting when people talk about sustainability or ESG. So first and foremost, most of our stocks are in tech and healthcare and communication services and consumer discretionary. So it doesn't have a very large carbon imprint. But importantly, when we think about governance, these are the entrepreneurs globally. And I'm sure if you think about your top entrepreneurs, your top business people in New Zealand, they're probably entrepreneurs. And that's certainly true in almost every country around the world, that the people creating the jobs, creating the wealth for societies around the world are these entrepreneurs. And this has been true forever, right? So if you go back in your country's history, you'll see the great entrepreneurs were the ones who created the wealth in your society, just as these entrepreneurs have done it in other places.
Joel, getting back to XOVR, there's a fair bit of competition on your heels. I mean, BlackRock are looking at this or may have even launched something. I see that Apollo and State Street Global Advisors, they've put a fund up that said it's got into a bit of trouble with the regulator, and it's probably slightly different when they talk about private credit being behind it. Are you worried that there's many more coming in, or do you think it's a good thing to have competition? And are there big differences between the funds probably?
Well, so State Street and Apollo are, as you mentioned, private credit, which is a completely different market. We're in private equity, and we're trying to take the leadership position with XOVR. We're working with some of the databases to take leadership role in how private equity is being priced on a regular basis. So we're working very closely there, and we're continuing to try to advance the state of the markets. And so competition's inevitable. Others will come in. We've been grappling with this for a while. We launched the fund in August of 2024, but we didn't buy our first private equity until December 3rd, so 3 months later. So only a small part of the overall fund can be in private equity. As I mentioned before, private equity is consistent with our model. Our entrepreneur model started on the private side. It was based on venture capitalists, and then we extended that over to the public. And we have a track record which goes back and shows how we were able to get into things like NVIDIA back in 2005 in our funds when we first launched. And we got Amazon in 2005. So our strategy, our approach enables to get into companies fairly early on, which we think is commensurate with again, our investment thesis. We're basically, again, taking private companies, venture capital-backed companies, and seeing as they go through and identifying them once they become public. If other companies try to plop in private equity and may be inconsistent with their thesis, and in fact, we recently talked to a fund manager, a CIO of a major company, who put a company in called AppLovin into a value fund. And we couldn't disagree more. And AppLovin is one of the highest growth stocks in the market. We've owned it for several years. It's gone up something like 3,000 times, or 3,000%, not 3,000 times, 3,000% in the last 2.5 years. It's not a value stock, it's a growth stock, but yet this value manager put it in. So other funds that try to put private equity into their funds, they're probably not going to be consistent with their investment theme.
Just to finish off, Joel, I'm just wondering what sort of take-up have you had for the XOVR, and particularly in Australia and New Zealand, this part of the world?
We very much appreciate you asking the question. We don't see the flows as an ETF. We're not allowed to see where they're coming from, but we know that there's strong demand coming from your part of the world. Just recently started. We know there are some brokers in your area that have recently listed us, and we appreciate the interest that you're expressing here. It's a great story. SpaceX and Starlink, great story around the world. Having access to private equity is certainly part of our story and with daily liquidity. So we appreciate you helping us get the word out. It's a pleasure speaking with you, and we hope to communicate with you more in the near future.
Really appreciate you joining us, Joel, and thanks everyone for tuning in. You can watch Shared Lunch on YouTube or follow us on your favourite podcast app. Leave us a rating and a comment about what you'd like to hear next. Mā te wā.